taking a closer look at what's playing itself out in that market scene with Viv Govender from Rand Swiss Offshore. Viv, a pleasure. Happy Friday.
Thanks for having me.
All right, Viv, it looks like it's been quite a positive week actually in markets. European markets today high. I think it's 1 month highs. We're seeing mostly green screens of the local bourse except for the resources counters. Keen to get your thoughts on those dynamics playing out.
Yeah, Europe has been helped to some extent by the good showing by the non-right parties in France. So if you look at just what's happened with regards to the French elections, there were fears that we're going to see a right-wing party take over there. That was delayed. They came in third in the elections on Sunday. We've also seen, lower inflation numbers from the US, weaker jobs numbers, weaker economic numbers coming out as well, indicating that we could probably see a rate cut come through by September. That's the probable timeline for the first rate cut. And that means that we probably have a chance of having 2 cuts this year, which is a bit higher than some of the expectations were like a few months ago. And so all those things, I think, are helping things. But the one difficulty you've seen is that one of the reasons we saw, for instance, the S&P 500 down yesterday was the fact that the Magnificent Seven, the companies that have benefited really well from the AI boom and from a couple other things, and driven stock market gains for the last year or so, those things came down quite dramatically. But you compare that to the Russell 2000, which is the index of the small shares in the US, that was up 3.5%. So the S&P was down yesterday, while the Russell was up 3.5%. And for context, 3.5% is more than half of its yearly gain so far this year.
Also interesting to see the Rand holding up quite strong, and also that's accompanied by a sell-off in resources counters. Keen to get your thoughts there. I think I did see some Chinese data coming out. Imports disappointing a little.
Yeah, look, the Chinese still remain, a little, weak in terms of their economy. I do think that if you look at what's happening in China right now, the economy basically is trying to, get around a really bad problem with their property sector, as well as, effectively, semi-sanctions from, the US and Europe, etc., especially the high-tech sector. So, it remains to be seen whether or not they are large enough to overcome this. For a smaller country like South Africa, for instance, we had the world basically banning the export of high-end chips to us. We are not going to be able to do that. China may just be large enough to actually, overcome that hurdle. So it remains to be seen what they can do there. But with regards to the rest of the market here, look, the rand is stronger because, if you're looking at lower interest rates tend to benefit not just companies that have growth, prospects, but also countries that have growth prospects. And South Africa is an emerging market country, but obviously our currency would benefit from the prospects of lower interest rates.
I'd like to actually, let's bring it home. Yeah, Capitec out with the trading update today. We don't have much information there except for the fact that those ranges of increases that we're seeing are quite good. I think 25% minimum there. It does speak of a different picture compared to our other big 4 banks. I think Capitec still managing to eke out quite a bit of value.
Yeah, Capitec has been spectacular over the last, little while. But the last 5 years, you look at them, they're up more than 100%. And, that is compared to like a bank like, for instance, if you look at ABSA, for instance, and you look at ABSA's, performance over that similar period of time, and it's down 8%. So you look at more than doubling on Capitec side and basically falling over 5 years for ABSA's side. It's been a spectacular success in the market. If you look at the valuations of Capitec versus some of what you think is the big 4 banks, it's above some of them. So yeah, it's been really strong for that company. But that being said, there's been some questions about some of their business models and how sustainable they are in terms of, long-term sustainability, especially looking at how their customer base is using some of their credit lines, etc., to handle the current weak economic conditions.
Speaking banking in the US, today we expect some of the major banks to start releasing their second quarter earnings there, the likes of JP Morgan Chase, Wells Fargo, Citi. I'm keen to get your thoughts on what we might anticipate there. Of course, a good measure of how that economy is actually doing.
Yeah, look, I mean, until very recently, many US citizens who actually had higher savings than they had, prior to COVID, just because of the amount of cash being pumped into the system over the last little while. To some extent, that's kind of diminished. We also are seeing people having difficulty with, of course, things like home loans and so on coming through. Like I said, we've seen economic numbers recently that indicate that unemployment is rising in the US. We have seen, indications that some people are experiencing some pressure. However, I don't think that translates directly over to the banks at the moment. And I don't expect to have too disappointing numbers coming through for them, despite the fact that we are seeing the overall economy in the US weaken at the moment.
And just speaking about that US economy, what we've also seen, Viv, this week is a bit of a sell-off in the tech stocks. Some of it, I guess, has been some profit taking. But we know that the US markets have really been dependent on the performance of those tech stocks to give it some form of return.
Yeah, look, I mean, the biggest question in global markets at the moment, in terms of actual valuations, if you look at the valuation of things like Tesla, Nvidia, Apple, Microsoft, and so on, is what's called scaling. The question is whether or not AI that we have right now can actually improve at the rate it's been improving over the last few years, or even a slower rate, but not kind of plateau. That's the fear, that it plateaus. And we don't know that yet. And there's been a couple of reports from some of the big banks over the last couple of weeks indicating that for AI companies to be valued as they are valued right now, they would need to add a couple of percentage points plus to global GDP every year for the next several years. We're talking trillions of extra dollars of valuation in the world. And they think that current AI technologies could add hundreds of billions over the next few years, but not tens of trillions like this needed to justify the valuations. And that's been one of the reasons we've seen some of these AI companies coming down. With Tesla, it's been a bit different. Look at Tesla's share price over the last month or so. It's up massively, 40+% over the last couple of months. But yesterday, a report came out from Bloomberg stating that an important announcement that they were supposed to have in August, which is around a robotaxi, which has always been an important thing for Tesla, is being delayed till October. I have not seen confirmation from other sources about that, but that's one of the reasons we saw Tesla fall particularly badly yesterday. One was the massive rise it had in the last month or so, and the second is a bit of bad news.
Does sound like interesting dynamics, Viv. I want to head into stock picks now, but first, let's take a look at counters that have found favor with your industry peers.
Okay, Martin, I think we are going to face over the next couple of months, call it 12 to 18, some significant military engagements. I think also their aerospace engineering and their space part of their business, call it a segment of their business, is growing and doing well. I think it's one of the few businesses that can, to some degree, start putting their stamp, a competitive stamp to SpaceX. And I think they're going to have a strong couple of quarters going forward, given some of the hostilities we're seeing globally.
So I'm sticking to the SA Inc. theme, and my stock pick today is Pepco. So Pepco is a retailer. It's an aggregation of a number of retail chains, retail stores. It started as a cash retailer. It's gone into credit, and then it's expanded into interesting stuff. It's got a fast-growing fintech business, and it's also gone into Brazil. It's established itself there, very small beachhead that could potentially grow quite aggressively over the next few years. They've also sold the building company. They initially tried, it failed, and now they've got a new buyer. So that's going to bring in about $1 billion, give or take, into the business.
I chose Signia today. It's a company that has its focus on providing low-cost and index-type solutions. These are an alternative to active fund management solutions, but at lower fee levels. In addition, and as a general statement, active fund managers have often lagged behind the comparative indices, and therefore indexation provides a valuable alternative. And Signia is well placed to capture flows entering into the space. The company appears to continue to gain ground in terms of assets under management, and it has stated that it will target the umbrella fund space and retail markets going forward, which provides further levers for growth.
All right, Viv, let's get your thoughts on some of those. We've got Lockheed Martin, Pepco as well as Signia.
Yeah, look, with Lockheed Martin, I don't know how they're going to compete SpaceX as strongly as has been hoped. I mean, look, SpaceX, people don't understand how successful SpaceX has been over the last couple of years. 60% of all satellites in space are SpaceX satellites. We're talking about we have gone to space since the 1950s. There's countries in space. And everyone else in space besides SpaceX has 40% of the satellites, and SpaceX has 60%. So that's how successful it has been in that area. That being said, he's probably correct with regards to rising global tensions. It's clear right now that we're probably going to have, global tensions not just between, NATO and Russia, but maybe to NATO and China going forward. And that's going to mean, having to amp up, armaments purchases, especially by Europe. So probably the defense arms dealing stocks, or whatever you're going to call them, are probably a good place to be, I think, in the next couple of years.
With that said, Viv, which counter are you loving this afternoon?
I like TSMC. This is the guys that make the chips that Nvidia and so on sell. And if you look at their share price list, it's done really well, but it hasn't quite, done as much as like an NVIDIA or an AMD has done over the last little while. So I think that there's still an opportunity here because whereas NVIDIA and AMD have competitors, TSMC really doesn't. So that might be an opportunity to look at if you're looking to play that sector and you're not so sure who's going to be winning, whether NVIDIA is overvalued, is going to be taken down by AMD in the future or an Intel. Well, TSMC is going to make all their chips, so it doesn't really matter for TSMC.
Well, Viv, thank you so much for wrapping the week up for us here on Business Lunch. That was your midday markets update with Rand Swiss Offshore's Viv Govender.